Weißt du, das war voll strange gewesen, weil eigentlich hat sie gesagt, dass gestern der Besichtigungstermin eigentlich gewesen wäre, ne? Ich so, okay, davon wusste ich jetzt nichts. Aber ja, hat sie halt dann gefragt und sie so, ja, ist okay, das können wir so machen. Und jo, dann halt morgen. 14:30 Uhr. Alright guys, we are still waiting for some people to join us today. We are already live on YouTube. Today we are going to talk about the basics of the Forex market. So yes. I'm doing pretty good, bro. What about you, Vester? I'm glad to hear that. We just planned the session for our masterclass today with Kashif and his sister. So yes, we will do a live session now every day, a masterclass session where we go from A to C. So even for the beginners, there will be a chance to click in and tune in from the beginning to the end. So yes, we will talk every day about something different. Today, this is our first session where we're talking about the basics of the Forex market, so nothing special, but just for everyone gets this. Yeah. What was your question, bro? Why we are make this call even on YouTube? Yeah, it doesn't work. So this was just a test for us. See if everything is working, and yes. So we're still waiting for some people to join us. So yeah, how are you doing, Comfort? I saw you joined our webinar. Oh well, we just was planning our masterclass session before, but no problem. You are always welcome, bro. Ah, no problem, no problem. Like I said, today we are going to talk about the basics of the Forex market. This masterclass will be from A to C, so everyone can get in and understand the basics of the Forex market. And we will do this masterclass sessions daily, so 5 times a week. And yes, hope everyone will join us and learn something new. Yo, bro, Kashif, it was 2 p.m. GMT plus 1, so we already started. Yeah, still waiting for you and your sister to come online. So, yeah. Yo, bro, we said it was 2 p.m. GMT plus 1, so I was already starting this webinar 12 minutes ago. Yes. Yeah. Yes. We got some new members. We got some new members, and this is the reason why we want to show how this forex thing works. Yes. 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 And I think for everyone it would be better if they get from A to C this forex thing showed, so you can understand everything what is needed to make consistent profits. If you are not a beginner, you can pass today's session at all, because we are going just over the basics here, what I was writing down. But you also can just tune in with us, and yeah, maybe you learn something new. So yeah, let's wait for the other guys. Yes. Most of the time you have to keep in mind the high impact news, because this is the point where the market makers get back to the table. The moves are already, I would say, or always just an just an cover up to make the real move. So when you look at those high impact news who moves the market, you don't have to look at those data behind this one. You just have to know when those news are happening, because this is the time where market makers came up and make some patterns. Yes, where they then use the market or the news to cover that up. So let's say we had here this session M formation. Yes, so market makers came up, make this. Let me make this something harder. So something like this. So we got an M formation here. We got the high set it up, let's say the previous week. Yes. So 1 week later, the market makers came up. This was probably here in this area midweek reversal, and let's say this here is Asian consolidation. Yes. So London session opens with a stop hunt. Market makers came up, worked that high again, but didn't break it, while introducing or inducing more retail traders to buy. And then let's say, all right, we got the news, the high impact news for the euro US dollar, euro US dollar, at London session opening. So most of the time they would say, all right, yeah, that's a good time to buy, and you all should buy, and then boom. This is how manipulation works. So, and if you look at the high impact use, you don't have to look for the outcome. You just have to look at the market structure at all to know what is really going on. So, because we all know the financial markets are manipulated on a daily basis, and you shouldn't even trust the media. You shouldn't even trust your broker. You shouldn't even trust anyone else, just yourself. So this is a very important thing. So let's see. Alright, we already got some numbers here. I'm waiting for Kashif. Alright, jeez. So, welcome. Can you hear me, Umi? Yes, hi, I'm doing good. What about you? Great, glad to hear this. So, like we talked about, this was our first LA Capital Masterclass session. This will be just a basic session. So, if you're a total beginner, we are going to talk about what is the Forex market usual, and how does it works, and what do you have to keep in mind in order to make some profits. We will do a daily session in the next few weeks, 5 times a week, and yeah, I hope you will enjoy it and learn something new every day. Yeah. Yes. Yeah, sure. Yes. Okay, yeah. Alright, alright. So for today's session, my plan was to show you just the basics. So in this case, we would start about what is the Forex market at all, yeah? And yes, so the Forex trading is the means through which one currency is changed into another one. So that means when you're trading Forex, you are always trading a currency pair. Yes, so wait, I don't know why this has stopped. Can you see my screen? Yes, okay, great. So that means when you trade Forex, you are always trading a currency pair, while by selling one currency while simultaneously buying another one. So each currency is, in the pair is listed as a 3-letter code, which tends to be formed of 2 letters that stand for the region, and one standing for the currency itself. So for example, let's say US dollar stands for the US dollar and JPY for the Japanese yen. So in the USD JPY pair, you are buying the US dollar by selling the Japanese yen. Yes? So some of the most frequently traded forex pairs are the euro versus the US dollar, so euro USD, the British pound against the US dollar, so that this would be GBP euro, and the British pound versus the US dollar, so GBP USD, which is, by the way, most of the volatile pairs overall. So to keep the things ordered, you have to, let's say there are major pairs, there are minor pairs, and exotics and regular pairs. Yes. So the major pairs, there will be 7 from this one, so 7 currencies that make up 80% of the global forex trading market. So includes Euro USD, USD JPY, GBP USD, and let's say, for example, another one, USD CHF. So then we get the minor pairs, as these are the less frequently traded pairs. These often feature major currencies against each other instead of the US dollar. Includes like Euro GBP, Euro CHF, or GBP JPY. So then you have the exotic ones. These are major currencies against one from a small or emerging economy. So it includes, let's say, the US dollar against USD, against South African rand, or British pound against the Mexican peso or something like this. Yes. So and then you have the regional pairs, pairs classified by regions such as Scandinavia or Australia, includes Euro NOK, AUD, NCD or AUD, Scandinavian dollar. So most Forex transactions are carried out by banks or individuals by seeking to buy a currency that will increase in value against the currency they sell. So if you have ever converted one currency into another, for example, when traveling, you have made a Forex transaction. So this was the introduction. So alright, so let's get to the next point. How does this Forex trading work? So institutional Forex trading takes place directly between two parties in an over-the-counter OTC market, yes. So meaning there are no centralized exchanges like the stock market, and the institutional Forex market is instead run by a global network of banks and other organizations. So like hedge funds and other really big players on the market like Bill Gates, for example. So transactions are spread across 4 major Forex trading centers in different time zones like London, New York, Sydney and Tokyo. Since there is no centralized location, you can trade Forex 24 hours a day, but only 5 days a week. So on the weekend the Forex market is closed, but some brokers are offering you to trade cryptos on the weekend, or indexes. Some, I think the volatility index you can trade also on some brokers on the weekend. So yes, so when we are going to talk about the session timing later then. So we just move on. So and then you can ask anything you want. Yeah. So all right, great. So most traders speculating on Forex prices do not take delivery of the currency itself. So instead, traders will make exchange rate predictions to take advantage of price movements in the market. So the most popular way of doing this is by trading derivatives, just as the rolling spot Forex contract operate. So trading derivatives allows you to speculate on an asset's price movement without taking ownership of that asset. For instance, when trading Forex, you can predict on the direction in which you think a currency pair's price will move. The extent to which your prediction is correct determines your profit or loss. So that makes sense, yeah. So there are 3 different types of the Forex market actually. So yes, there's on the one side the spot Forex market, so the physical exchange of a currency pair which takes place at the exact point the trade is settled on the spot or within a short period of time. Derivatives based on the spot Forex markets are offered over the counter by dealers like your broker, Forex or JFX or XM or something like this. So then we have the Forex market. A contract is agreeing to buy or sell a set amount of a currency at a specified price and to be settled as a set date in the future or within a range of future dates. So the last one would be the futures Forex market. And this is an exchange traded contract to buy or sell a set amount of a given currency at a set price and date in the future. So Forex pricing. Let's say we are going to talk about GBP USD. Yes. So the first currency is so-called the base currency. The second currency is called the quote currency. The price of a Forex pair is how much one unit of the base currency is worth in the quote currency. So in the pound rises against the dollar, then a single pound will be worth more than dollars, and the pair's price will increase. So if it drops, the pair's price will decrease. So if you think that the base currency in the pair is likely to strengthen against the quote currency, you can buy the pair going long, or if you think it will weaken, you can sell the pair and going short. So alright, so I hope until now you got this. This was how does Forex trading work. I would like okay, great. I have much more. I have much more, but the good thing is you can just re-watch this session on our YouTube channel like everyone else who's a beginner, so you can write all these things down, and I think if you watch this one time more again, you have all the input saved in your head. So alright, so let's move on to the next point. What is leverage in Forex trading? A key advantage of spot Forex is the ability to open a position on leverage. Leverage allows you to increase your exposure to a financial market without having to commit as much capital. So when trading with leverage, you don't need to pay the full value of your trade upfront. Instead, you put down a small deposit known as margin. When you close a leverage position, your profit or loss is based on the full size of the trade. So this means that leverage can magnify your profits, but it also brings the risk of amplified losses, including losses that can exceed your initial deposit. Leverage trading therefore makes it extremely important to learn how to manage your risk. So yeah, there we can go directly to the next point. What is margin in Forex trading? So yes. All right. So let's take for example here trade. Yeah. So on Euro USD. So let's say you have $100 in your account. So and your leverage would be 1 to 50. So that means when you make 10 pips, that would be $5 in your account. Yes. So in this you can also look for some calculators. Some pip calculator that you can watch on. Wait a moment. Basically, you can just look here at XM or even other sites where you can. Wait a moment, I will show you this. Alright, it's not. Alright, so let's say margin is 1 to 50. Contract size. Oh, this is too much. This is like anytime you want to search for something. Alright, so here's like an example. So on GBP USD, a pip is the fourth decimal place 0.001. So if you enter long at 1.64 and the rate of GBP USD moves up to 1.64500, you have made 50 pips or 0.0050. So here is the pip value calculator. This is a tool you can use while trading to manage your risk a bit more. So let's say we are going to take Euro USD, your basic currency is USD. Yes, exactly. Exactly. Yes. So and if you are in a alright. So we can move on. Alright. No problem. No problem at all. So alright, so the next point is what is margin in Forex trading, yeah? So in this case, margin is a key part of leverage trading. It is a term used to describe the initial deposit you put up to open and maintain a leverage position. And when you are trading Forex with margin, remember that your margin requirement will change depending on your broker and how large your trade size is. So this is basically what we are talking about before. So margin is usually expressed as a percentage of the full position. So a trade on Euro USD, for instance, might only create a deficit of 2% of the total value of the position for it to be opened, meaning that while you are still risking 10,000, you would only need to deposit $200 to get full exposure. So, yes, let's get to the next point. That would be, what is a pip? So, yeah, pips are the units used to measure movement in a Forex pair. A Forex pip usually refers to a movement in the fourth decimal place of a currency pair. So, for example, we have here the Euro USD moves from 1.45361 to 1.35371. Then it has moved a single pip. The decimal places that are shown of the pip are called micro pips, or sometimes pipettes, and represent a fraction of a pip. So let's say we get in at Euro USD, let's say here at the low of the week at 1.089, for example. Yeah. So when price moves now from, let's say, yes, from this point, so it would be bought at 1.093, it would be 30 pips. So, and so on, yes. So this would be 100 pips at 1.10. So this is easy to understand. So you can, yes, yes. No problem. Yeah. That's just the value of the price movement. So you always, to be honest, it's not important to understand this, because you always can calculate this one. Yeah. So let's say, for example, we are going to short a euro US dollar right about here at the high of the week. Yeah. So let's say our stop loss for this one would be 25 pips. Yeah. What? 50 pips, something like this. You always can calculate this here. So like you see here, you can see this, a 15 pip stop loss, yeah, and 151 pips would this be. So, and let's say our take profit would be 50 pips or 60 pips. So this would be around 600 pips. So this is how do I say it? This is the price. These pips are already done, so you just have to calculate your price. So let's say if you enter here, and then yeah, you can calculate this. So let's say, all right, for 50 pips, this would be then 1.112. Yes. So stop loss would be 20 pips. This would be 1.11870. So yes, I hope you got this. Okay, all right. So all right, great. All right. So yeah, what is a spread? So in forex trading, the spread is the difference between the buy and sell prices quoted for a forex pair. If, for instance, the buy price on Euro USD was 1.7645 and the sell price was at 1.7649, the spread would be 4 pips. So if you want to open a long position, you trade at the buy price. which is slightly above the market price. If you want to open a short position, you trade at the sell price slightly below the market price. So yes, so that means you, let's say, okay, we are going to the actual date of Euro USD forward. Alright, so let's say Euro USD is at the moment at 1.07850, yeah? So if you want to sell, you have the price here. So if you want to sell, your sell order would be getting in here, yeah? That's the difference between the spread. So for instance, for example, if you want to buy, let's say here, and you have a spread of 4 pips, your entry would be right about here, yes? So you always paying the commissions to your broker with those spreads. Here's a good tip when trading at session timing, or let's say session changeovers. The spreads are always higher then, so especially when there are high impact news are. This is a broker's tool, like I said. So you just can get the best entry, and there are some brokers which are putting the spread as high as 1000 pips or 100 pips on different exotic pairs or on gold, for example. So even if you get the best entry here, and the price is already here, but the spread is still above here, you don't make any cent, you don't make any pound, dollar, yeah. Yes. I hope you got this. Yeah, it's a little bit of difficult for the beginner or at the beginning, uh, but if you have some experience, let's say this is kindergarten shit and for you, yeah. So yeah, at the moment it's very terrifying, but once you get this and you're smart, you will get this very easily. So it's not a problem at all. So it's not. Yes, no problem. So yes, we only have 5 minutes left, I think.